Good afternoon, everybody, and welcome to the Traders Group. This is your host, Gary Humeski. It is Monday, February the 9th, a little bit after 4 p.m. Eastern Time. Kind of a gloomy day here in Florida. I hope where you're at it's a little bit more sunny. I want to welcome all the new people on board, as well as thank all the people that have been with me for a while and staying with me. Hopefully you're learning a lot. Let's get through the disclaimer real quick. This webinar is for educational purposes only. I am not a licensed representative, and I'm not giving any kind of trading advice whatsoever. Okay. All right, where'd the market end up today? I was doing so much research. Ended up 95 down. Okay. Cold in Toronto? Yeah, man. Let's see. Okay. Jerry, are you here today? Yeah, you're here. Good. Tom, you're here. Jose's here. Good. Earl's here. Good, good, good. I'm going to pick all your guys' brain here towards the end. I'm going to start opening this thing up a little bit more for you guys to share with me what you guys are looking at as well, because that's really part of this whole group, is not just me doing a lot of the looking, which is fine, and I enjoy doing that, but also to bring the synergy of you guys together so we can benefit and share from each other. All right, let's take a look at the macro picture, what happened here today in the market, or totally, I should say. You know what I see with this chart? I see a bunch of non-decided direction and volatility, up, down, up, down, up, down. Market is really volatile right now. I mean, it looks like this on the Dow, on the S&P, on the NASDAQ. It's just literally up, down, up, down. We're stuck in this range here. The Hull is still pointing up. The DPO is still pointing up, meaning it's not significantly crossed the barriers on any three of the indexes, so that's still positive. But also remember, folks, when you use the seasonality part of this whole Traders Group and you type in DWI space X, it gives you a historical, oops, it's underscore, DWI underscore X. Well, wait a second. What the heck? Indexes. Maybe I went to Dow Jones. Let's try that. Asterisk DWI. Okay. Anyways, this is the Dow in another part. But if you look at history right here, let's see what I'm using. Let's use best rating. That's not going to pick it up. It's got to be best profit. 75% probability from the last 10-year history that the Dow goes up between the beginning of February to the middle, thereabouts. And then from the middle there to the beginning of March, there's a 66% probability. I think there may be a little bit stronger than that. No, it's still 66. That the Dow is going to go down towards the middle of the month into March. So with all of that in mind, we've got to keep that kind of history and seasonality in the back of our mind of when we're looking at all of these zigzag charts to say what's going to happen. You know, it seems that the market is going up. It's trying to find some buyers to move up higher. It's not. That's evidenced by the long wicks that you see. When you see these kind of long wicks, that means it went up and then came back down. It went up and came back down. Today it looks like we're almost forming a doji on the Dow. On the S&P, same thing, but it's a negative doji. And on the NASDAQ, we actually have a wider doji type candle that's pulling down. So if history is going to repeat itself, we've gone up, we've gone down, we've gone up. Looks like the next cycle may be down. So let's just be aware of that. What does the VIX and the SPYs tell us? Kind of the same thing. You know, touched here in the beginning of January at the 61.8, pulled back down, retraced to the 23, pulled back up, almost touched the 61, pulled back down. Now it looks like it's slowly going to try to pull back up, where the spies are looking like they're pulling down. So if we keep this in mind, the next cycle of the market historically is going to be bearish. I was totally off on that last week. Anybody make money last week, by the way? I had a good week. LinkedIn was a real nice home run. Twitter worked out. A couple other ones didn't. Yelp was a loser for me. Oh yeah, forgot about the huge home run. What was it? Thanks. Disney. Who took advantage of Disney? Raise their hand. Or at least say yes in the chat box. Anybody do that? I mean, that was just such, I know Jerry made a killing on that. An absolute killing on that, which was a great, great trade for all of us. So Apple's done well. Disney's done well. LinkedIn did well. We've had a couple of losers. But as long as you make those runners win, then you're gonna do real well. I'm up 30% over the last couple of weeks, so I'm real pleased with that. I know Jerry had a bang-up month in January. He's just been hitting it out of the park. So Disney, Twitter, both winners for you, Don. Excellent, 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 excellent. All right, so again, I was off. I started out the webinar last week by saying I'm telling everybody I'm bearish, and boy, did I was wrong on that count. But according to the charts and technically speaking and historically speaking, this is the kind of phase we're going to be getting into. Okay, so keep all of that in mind. All right, let's go to the micro picture. See what's coming up this week. I'm going to ask you about Akamai, what you guys think about them as well. Economic calendar doesn't bode that it's giving us a lot of governmental news that's going to be impacting us, except jobless claims on Thursday. You got the University of Michigan sentiment report that kind of moves the market a little bit. Usually that's pretty built in. But the jobless claim that happened last week on the 5th, this here was just absolutely killer for the financials, because they've been hammered mercilessly in 2015 on the hopes and prayers that the interest rates were going to go higher, but they were very quickly dashed. However, with last week's blowout job numbers and the revision to the report, it made the financials look really, really well, and they took advantage of that last week. So let's see what happens with this week's report on the 12th, so be aware of that. Retail sales, that's kind of show what happens over the Christmas time too, so specifically in December. So take a look for that and be aware of those things. I don't see anything else that's necessarily going to major affect the market this week, so Thursday is going to be kind of a day. By the way, there's a guy, he wrote the encyclopedia on candlesticks. His name is Bulkowski. Anybody heard of him? Bulkowski? Yes, no? Anybody? You can look him up, B-U-K. Yeah, okay. So, Jerry, yeah, you need to look him up because he's an incredible guy. Guy retired at age 36. He was so successful. Understands technical analysis incredibly, defines to the T in every candlestick pattern. Fantastic, very, very smart individual. But one of the interesting things, and the reason I'm bringing his name up, is that he did a historical, I don't know, test if you want to call it. It's probably not the right word, but on which day is best to get into the market. This is which day of the week, and which day of the week is best to get out of the market. Anybody have an idea of what that is? It's pretty interesting. Best day to get into the market, according to his study, that's the word I was thinking of, is Monday. Best day to get out of the market is Thursday or Friday. So I thought that was very interesting. One of the things I was looking at over the weekend was Priceline, because it is up and coming, and it's been beat down really good. And I believe, because I talked about this last year in a webinar, I kind of looked it up from history, because I did a lot of research on who is Priceline, what do they do, what kind of market share they have, what kind of management they have, what's their PE, what's their PEG. And they're just a phenomenally well-managed company, smoking and blowing out earnings almost every quarter. However, Expedia got kicked in the butt last week. But I remember last year when I looked at who owns the majority of market share in Europe, it was Expedia at 53% and Priceline at 47%, but nipping at their heels. I also read a bunch of literature on people who analyzed them and said that Priceline's OTA, online travel agency models, margins are much bigger than what Expedia's are. So I thought to myself, you know what? It's going to be a matter of time before Priceline starts really chomping away and I'll eat half that elephant. You know, what do they say? The easiest way to eat elephant is one bite at a time. I think Priceline was taking some chomps. And I think that may be one of the reasons that Expedia, without the knowledge that everybody knows, I mean, one of the headwinds that everybody's concerned about a little bit is the Forex. In other words, the strengthening dollar in Europe would indicate that, from a technical standpoint, common sense standpoint, less people are traveling because it costs more. I tend to disagree with that. I think Priceline is going to do really, really well. And from history, they've blown everything out. Where is the best rating? 9 out of 9 years, they've just destroyed earnings. And what I like about them is they've been beat down. I was going to do a bull call spread on this morning on the weeklies, probably take my money off the table on Thursday, and I'm kicking myself in the butt I didn't. Because if you look at, well, you can see, let's go to a chart. Had a breakout. They had a breakout last Thursday. You got a mobile pulling up with a detrending a price oscillator coming up right to the mid. And they have just been hammered down. This morning, this is a 1-day, 1-minute chart. Look where it was this morning. This is right here. You can see the time. When it was about here and it started to pull back, and I came back from my workout, I was thinking, man, I should get into this thing around 217. It ran up to 239. I could have done just that run alone and made a killing and just take my money off the table in 1 day, but then that construes that you're a day trader. You got to watch out because they'll flag you on Thinkorswim, and they'll make sure that you have enough margin requirements to be able to do those kind of swings on a daily basis. But what I did on this is the target price according to Best Choice, using that 11.64, puts Priceline at about $1,141 according to Best Choice as a target. Now, if you're going to do directionally on Priceline, I would be looking at Febs. And the reason is it's a very expensive premium to pay, folks, to get into this. And they're coming out with earnings the day before Friday expiration, which is the 19th. The monthly expirations expire on the 21st. We're all taking our money off the table. So this could be a 1-day trade if they blow out earnings. So if that's the case and it's too expensive to get into the monthlies, obviously you can't do the weeklies. Interesting thing I thought, does anybody do credit spreads here? Yes, no? I mean, the volatility on Priceline is really about in the middle. The IV rank is. It's at the middle percentile of its yearly implied volatility. So it's not super high, which means there isn't. You do? I don't know what R. Walker. What's your first name? I don't want to call you R. Walker. Okay, I'll call you Richard. I like that. I'll call you Dick. That's fine. One of the things I saw to do a credit spread on Priceline that I thought was interesting for you people that are interested is go to March. Now, first of all, you guys can, well, let's do it this way. Can you guys see over here this number? What that says? I wish they did it in a stronger color. It says 85.61. That means what the market makers in the market are pricing in to the options that you're looking at is an $85 move, either up or down. Okay? You don't have an MMM yet, but look for it right here. Right next to company profile, between that and the EBT, you'll see the MMM, and that will be the overnight move that market makers are thinking of. So, anyways, go to March. Look at this right here. I saw that and I said, that's interesting. Actually, somebody came in about 2,600 options. Somebody's got some money. Now, one of the things I don't know is what is it, bullish or bearish. I'm thinking it was bullish, and they did a credit spread. They sold the 995 and bought the 990s for $1.60 credit. For $1.60, you're only risking $340 for $160, and your break even is $993.40, which means that if we believe Priceline is going to go up and smoke it, we'll keep all of that. And it's only a $5 spread. That's one way I was looking at it, to get in with not a lot of cost out of pocket and not a lot of risk for a credit spread. The other is to look at, let's expand this out to 50. If we believe that earnings are going to produce an 11.64% move, which puts us a target of 1141, and if we say, all right, well, let's look at what FEBs are, but let's go out of the money. Let's say the stock moves what it says here, which is $60.31. What does that put us at? 1033 plus, I'm not going to do all the pennies, $60 puts it almost 1100. But one thing I know, and anybody who trades Priceline, which I have historically, it can swing heavy in one day, even more so in a week. This number, because remember, earnings aren't coming up until the 26th, which means we've still got a week from this Thursday. And one of the other things we can do, it's an acronym that I used to use. Remember, it's called RUIE, R-U-I-E, run up into earnings. You can play that volatility run up and then take your money off the table before earnings. So then you're not dealing with an unknown event. Again, earnings is coming out on the 19th before market. So you could say, well, okay, I'm going to go way out of the money. I'm saying, okay, 1093. What if I went and I bought the 1100s? You can see it's 461 contracts bought today and 1,025 that are being held on an overnight basis. So, and yeah, that's expensive, $7.60. However, relative to $1,000 stock, that's actually less than 1%. It's like 0.7 of 1%. Because 1% of $1,000 is $10, right? So that would be a directional move if I was to do Priceline. All right. If you want to play a bull call on it, and I was going to do this again, I'm kicking myself in the butt, but I believe it's still going to continue to run. I would be looking right here at the 50s. you can do a very, pay 70 cents. And this is for some quick money, not spending a lot, trading a high volatile stock. So you risk $70 to potentially make 180. Now, you're going pretty far out of the money to do this. Doesn't mean that, you know, these kind of going out would dictate that this thing has to move 17, probably $18. This would have to move $18 by Friday in order for you to really gain and keep that profit. Because otherwise time decay will get to you. But that's one way you can get in and play for cheap, not risk a lot. Yeah, time decay, Jerry, is something, you know, trading the vol and time decay is something I love to do. I'm getting really good at these bull call spreads, trading the weeklies. You don't, you know, it's a defined risk and it's inexpensive that you can play these big boy stocks for cheap. I'm talking 59 cents, 64 cents, 28 cents, 79 cents, or as I just showed you on this one, 70 cents. It's not a lot. It's not a lot that you're risking, and you can make a good hit in a short period of time. Okay, let's move on. What else am I looking at? Oh, I know. Baidu. Interesting fact, everybody, and for those of you that are going to be listening to this recording, I read something very interesting about Baidu. Baidu has just recently purchased a Chinese company, and for the life of me I could never pronounce the name because it starts with an X, but they purchased them for $100 million. I don't think that's yen, I think that's US. And it is going to produce a phone that is going to rival Apple's i6 in the Chinese market. So I thought that was a very interesting little tidbit of information. Another thing that's interesting is Baidu runs. If somebody wants to play a longer term on this, go to tab 3, change it from best rating to best profit. Just drag your mouse from this area here where it dips in February all the way to the end of the year. And you come up with a very interesting statistic. 8 out of 9 years, that thing runs all the way up, which would mean that you could potentially buy what's called a leap or do a calendar on this thing. In other words, buy the January expiration if they offer that. I don't know if they do. Yeah, January 16. Very interesting. I mean, you look at January 16, you got somebody out here at the 300s, which is huge, but still, I mean, this is a counter spread. 10,000 open interest and 1,800 contracts today alone for $5.95. And the front month at the 300s, well, there's nothing. It's 8 cents. You really couldn't sell that. But there you go. There's 5,000 in Marches. Which is another inexpensive way to get into Baidu as well, is buy some time. I would not stretch that far. Earnings are coming out for Baidu, by the way, this week. Coming out on the 11th after market. So let's go back to a shorter time frame to see if there's an earnings trade off of this. And it's 50-50 in my book. A 77.78 is not a really great rating for me. Let's hit the puzzle piece and make sure that we do have the right info. Go back to tab 3, see if we could squeeze out a little bit more profit there. Well, 4-day trade there, but that's from the 22nd. And you know, you look at this historically, you know, there's a pop here. That doesn't look good. it goes down in 2011, it goes down in 2012. Another thing that I do if I was looking to do an earnings trade on Baidu is, this doesn't take long. You know what? You don't even have to do this on Thinkorswim. You can do it on Best Choice. You just go to the regular linear regression, change it to 5 years. And what you're looking for is in the beginning of the year, and you can visually just see this and just highlight that area. Well, we know it missed right here. Go back to a 5, and this is what year? This is 2013. 2014 right here, you can highlight this area, see what happens. Well, probably it popped. See, this is the thing you don't know, and that's why I usually go to my Thinkorswim charts, because it actually shows the earnings date. You can see it. And I simply take from their fall to the springtime and highlight that area, because then you can see this and put your cursor here. Well, it was a small pop last year, so that wasn't that great. Let's see what it did the year before. Year before, it tanked hard. So we got a 50-50, and the first one, the 14, wasn't that good. So let's go to 2012. 2012, well, guess what? It went down. So from an earnings standpoint, I'd be a little leery. My suggestion is let's wait till earnings to come out and then trade it after earnings. I'll go back one more year to 2010. 2010 we had a pop-up. So in my book, we got those 4 years from 2010 to 2014, and it's a 50-50. That's not strong enough for me to be able to make a trade on it. Now, you know, there's a lot of people that are pretty froggy on this thing. And you can see there's 3,700 contracts that were bought today. Again, you don't know if that's people selling that too. So that's another thing you don't know. You got 4,000 open interest here on the put side. So pretty, and there's you know, these ones where you see these gaps, these are people doing either credit spreads or more than likely debit spreads with $5 increments, 220, 225. I stayed, I guess when I did my analysis, I guess I stayed bullish on this thing because somehow I found an 89% probability with Best Choice. It's interesting. Nope. 240, 290 strangle. This is 233 credit. Which, what, on the weeklies? There's a long, someplace I found this. Best profit. Well, that's towards the end there. There's a short all over the place. The weeklies, okay, thanks. Let's take a look at what Robert just came up with. And that's, oh, I had a big learning lesson last week on a strangler because I played Twitter on a strangle. And I actually only made a few pennies on it. I could have gone directionally and I would have made a lot more. But I was just so unsure because of their guidance, and they were, anyways, for a multitude of reasons, I didn't know which direction to go, and I didn't feel comfortable doing directionally. So I went too far out of the money, and I spent, I don't know, nearly 35, 40 minutes with a toss trader, a good trader. He's a broker there. He's been there for quite a while. I remember talking to him years ago. And he's very friendly, and he likes to talk. But one of the lessons, again, is when you have this implied volatility built in of $13, that's what the market is telling you, that this thing is going to move, $13 in one way or the other. Well, if you go too far out of it on a strangle, you'll lose. The idea for a strangle is whichever direction or whichever strike you are buying, it has to blow through it one way or the other in order for you to profit. Does that make sense to people? In other words, if you're too far out of the money and you're deciding you're bearish and it doesn't quite reach it, you'll lose. You simply will lose because you're paying more for the call than you are for the put. And vice versa. If you're bullish on this, you're expecting a $13 move plus 215. What does that put us at? 228? 228. There's 230s right there. You have 2,400. So I would probably go closer on a strangle. I would hope that it would bust through there. As a matter of fact, I like the 220s. Buying those. Problem is, this is expensive, folks. Take $13 south of 217. That puts me at 204, so I'd probably do the 207s. That's too expensive for me at $8. Oh, you did the strangle for a credit. Okay. Well, you went pretty far out if you did the 240s. Which, you know, if it works, that's good. 241.90s. Well, this is a debit, Bob, so I don't know what you did. You know, doing a strangle, you would have had to do a debit on a strangle, so I don't know how you got a credit unless you sold them. If you sold them, then you're getting a credit. So, yeah, so you sold them. Okay. Well, your break even is 188 and 241. Well, see how it works out and tell me. Well, I mean, what I learned was I'm bullish on Baidu, so if I was to do this, I'd create a debit, but again, I would do it to where I need the number to blow through the expected built-in move. I would even use the $12.49. Here's the MMM right up here. Add the, just, you know, round everything down, folks. I always do that. 12 plus 215 puts me at 227. I need to be below that in order for this to work for me if I'm doing a debit. So, I mean, I could stretch to the 225s. I could stretch to the 205s maybe, if it has it. Still paying $5.70. But you have an there's only 28% probability right now of this being in the money on the 205 and a 28% probability. So this is just a learning lesson I learned from Twitter. As you need to, in order for a strangle on a debit to work, it has to blow through whatever strike you are buying, be it on the call or the put side, in order for this to work. It has to go through your strike. But Bob, tell me how the credit works out. If so, then you know I've learned something new as well. Oh, okay, I see what you did. Okay. Dick had said a comment here. If you look at Baidu on BCS, you'll notice if Baidu was at the bottom of the extremes, it went up. If it was at the top of the extremes on the 6-month chart, it went down for the last 4 years. That's an interesting point to make. Let's take a look at that. Okay, 6-month chart. Top of the chart goes down, so I guess we would snap this back. I guess a 2-year chart would help too. I mean, if you just looked at a 6-month and you went back for 4 years, if that's what you're saying, taking 6-month snapshots, it has a nice volatility and a nice spread between the top line and the bottom line, between 154 and 178. That's nearly $20, which is a nice spread because $20 on 154 stock is well over a 10% spread, and you want that if you're going to be playing these kind of roles. So What Dick is basically saying is if it's at the bottom on a 6-month chart with a 4-year track record of going up and down on the extremes, you got a good probability that it's going to be going up. One of the things you can see is it's way above the 200. Oh, one of the interesting things, folks, if you, I think, Dick, you may know this technique. These hash marks, remember them? If they're half purple, that signifies, according to the algorithms in Best Choice, a 90% probability that's the way the stock is going to go the next day. You see that this is I went back to the old default. This is a 20 SMA. This is a 200. You see that almost like a pennant being formed. If you did this, 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 and this. These are extensions that I did based on the low to the high to the low, and these are the potential Fibonacci extensions. So you could take a gander at that, maybe if you want to review this and see where that's at. So this is definitely a bullish trade for me. I like it. Bob, keep me informed how the credit spread or the credit strangle worked on that. Let's see. I had Baidu 220, 225s on a bull call is what I had for cheap. I don't know where that's at. 220, 225s. I had it for a lot less. I had it for, holy Toledo, I had it for $1 and it's all the way up to $1. Oh, there it is. It went up $3.25. And I had this literally, this was in at 1 o'clock today. I had this at $1.01. So you have to go a little bit further out because you don't even have a 50, you can't even make double your money on that. Well, that's still cheap. I'm sorry, that's still cheap. It's a $5 spread. So, you spend $159 for the potential to make $341. That's a pretty good deal, folks. That's a really nice return, risk reward right there. As long as the stock gets above $221.59, you will make a good portion of that $341 on $159. So that's what I had there. A bull put, meaning a credit for selling a put, I had 207, 212. I don't know if that's still relative or not. So the 212s by the 207.50s. $1.97 credit. I had less. I had more because the stock has gone up. That's why. I had 212, 215. It's still a good risk reward for a credit. Okay, let's move on. See over here, I like this. If you guys have toss, you should put this off the gear. You go to the gear, go to lovers and losers is what they call it. Lovers and losers off the gear. And I like analyst upgrades. One of them that popped on the radar was Mosaic. And they're coming out with earnings on the 11th, which is this Wednesday, before market on the 11th. Look at Best Choice on Mosaic. What a run. I mean, this is part of the upgrade here. And they're just, if you look at all of these MAs, they've all crossed the 200. You have the 50 actually doing a cross right here. Strong Mac, alligator mouth. one of the things I do when I do a weekly on a MACD. I like to see that alligator mouth. Seasonally, 90% probability. Now that's from the end of January. Hold on. Well, it's to the 16th. I'm pretty strong about it. I think because the analyst upgraded. What did I have for? No, I didn't. So we'll have to do this. I'll be conscious of time here. Something I've sometimes don't. Jerry, you're gonna be my timekeeper, okay? You gotta remind me if I'm going too far off of one because I want to squeeze all this stuff in. Mosaic. Well, let's see what spot month is. You definitely have more interest. You got 4,900 contracts. Wow, that's quite a bit. Open interest for at the money at the 50s. What does it look like on my charts? Wow, it looks really strong. I mean, that's just a strong looking chart. And I'll bet you if I went out to a year, it's still going to be strong. Yeah, Mosaic's just been running. Looks like it's overbought. And it even looks like it's overbought at the 95.6 extreme of best choice. 5-year, it's really not. And if you really look here, let's take a look at this snapshot. It actually filled the gap right here in this time frame. So that was actually June of last year. And even that trend is down. But this trend is up. This trend is up. Definitely up. What did this close at? What was the high on that? $50.70? 50.74. That's interesting. It just beat it. Oh, there it was right there. Yeah, I know. It's sitting screaming up on the historic chart. One of my concerns about it. However, when you got analyst upgrades, that means that they've done their due diligence and they're putting a positive spin on it. Let's go and see what the analysts think here. These are all the stocks that I went over for this webinar, so you guys know. Kind of a mixed bag, right? You got more hold than you do buy. Maybe we better wait for earnings to come out and then see what happens. I think that probably would be a better move because this spooks me a little bit. And, you know, anybody that's been with Best Choice for a while, we know these linear regression lines do work. And we're screaming at the top at the 97.1 on 6 months. On 1 year, we're at the 99.8. On 2 year, we're even above it. So, you know, all three of those time frames indicate that it's overbought. You look at open interest, though, and it's almost at the 60th percentile of its 1 year historic IV, which also means the market makers are concerned as well. You only have $1.90, $1.90, $1.30. Let's wait. I'm going to wait on that one. I have some shorts for you, though. Did you read about Tesla? Anybody read about Tesla? Heard the news about it. First of all, Tesla is I mean, look where it's sitting. This is 2015. Let me move this chart to August so you can see it better. Now, see what a different picture is? When you move this around, I'm learning to keep the default January on the seasonal. I used to move it around just for visual purposes so you guys could see things better, but really changes the picture. As you see this part here, and again, I'm going to hit the puzzle piece to make sure I've got accurate data, which I do. Tab 3, best profit per trade. Well, this is a long. I got a 4 out of 4 long. Not enough history really to tell me to go along on this. One of my concerns is this is what I read on Seeking Alpha. I don't know if I could still pull up that same article. You click analysis. Okay, there it is. The investment case used to be that Tesla would have a 1 to 2 year time market advantage for the 200-mile EV at 35,000. Now we are learning that Tesla might be 1 or 2 years behind the competition in this head-to-head matchup. Who is the competition? General Motors. General Motors is going to be supposedly coming out with a 200-mile EV, 200-mile electric vehicle, 2 years before Tesla. And therefore the Tesla investment case had to be reformulated into arguing that time to market advantage doesn't matter anymore. So one of the things that's been pushing, even Elon Musk, who owns Tesla, said his own stock is overpriced. I don't know why the CEO of a company would say that. It's under its 200. You definitively see, and Dick, this is kind of the same pattern you were noticing, but on Baidu, you know, up, down, up, down, up, down, up. I wonder what my charts look like on this. I listed it as a short. At my 49.89 crossing, it bounced off of, if you guys can see this a little bit better, bounced off the 89. You have a shooting star right here, or an inverted hammer as it's called, which is an indication of an end of a bull run, and this was the bull run. So you had two kind of resistance levels there, the 89 and then the candlestick pattern. So what I listed is the Feb. What did I list? The Feb 200s. Got a lot of positive here, 4,900. Oops, I'm sorry, the wrong stock. 200, 4,100 contracts there. Let's do less contracts so you guys can see this better. 4,100, 834 today. So that's how I listed as a put for $3.75. That's the mark or the mid. You could put it in an offer, see if you get a bite on that. And for some reason, I had this listed as 100% short on Best Choice. I don't know how I got that. Somehow I got 100% short. Nope, it's all coming up long. You know what it may have been, guys? It may have been that I was using August, which definitely changes. No, August is definitively long. I mean, it's just completely long. 3 out of 1. 5 long. Well, you guys make up your mind on that. I listed it as a put. One that is a historical precedent is Owens Corning. They are coming up with earnings this the 11th also, but that's before market, which means you'd have to position yourself tomorrow if it's something you want to do. Owens Corning from OC. 10 hold. That's real negative, at least from the analyst perspective. From a charting perspective, I love to show this chart. This is on a 1 year. For those of you that believe in linear regression, and my linear regression are set at a 90 width versus best choices, it's still showing the same thing. Overbought and coming down. I almost have a double top right here. See that? See how the candlesticks look? You can kind of see that here. Two dojis and starting to come down. 90% probability for tomorrow to go down based on the hash marks. You got a MACD that's crossed over. I had a bear put 38.36. It's only 25 cents. It's pretty cheap, folks, right? Not spending a lot. I mean, it's not a very expensive. You could do a directional on this as well, but I'm just saying if you really want to go cheap. But can you see this? This is one of the things I look for is risk reward. I risk $25 to make 75 potential. Again, that's if it blows through my strikes, but I'm pretty close to the money. They're expecting a $2.72 move on 39.70. See what that puts us at. $39.70 minus 2.72 equals 36.98. Market makers move is $2, and part of this is because this went down and I did my research over the weekend. You may want to go a little bit closer to the money. If you don't want to do a bear put on this, then directional would be a way to go as well. Let's see what March has to offer. Oh, there you go, 1,759. I wonder what that would cost. Oh, I like that, 48 cents. Well, it's a dollar spread, which means I have the ability to potentially make double my money. But that's a cheap way also, which is also buying time to get into this. Or you could go way out of the money and do a bear call, sell out of the money here, because you got 1,500 here that have bought, and I don't know if that's a bear call. 35-cent credit. I wouldn't go that close though. And there's not enough open it. Well, I mean, there's a little bit if you went further out, but this is not a big mover, folks. So, if anything, I would do directional and stay close to the money, if not at the money. Okay, gosh, I'm blowing and going. I got one more I'm going to talk about, and then I'm going to open this up to see what you guys are. Oh, I know. Got to tell you guys this. Little birdie landed on my shoulder of a guy I talked to over the weekend, and he subscribes to a service called Option Hacker. Evidently, they wrote an algorithm using some floor traders' knowledge of finding open interest, unusual open interest and volume indicating institutional or large pocket money. Walgreens, first week in March, this person came in, one lot, bought 1,500 contracts for the 76.5 bullish move, spent $201,000. So trade of interest. I had to add WBA because you don't have it in your database here, so I added it. Now, not a huge rating, but you have a distinct historical probability of it 8 out of 9 years going up. So a little bit FYI. Last one I want to talk about, and some of these folks are not right away, just beware. Oh, I'm thinking of short and Twitter, by the way. Sorry, I'm bouncing a little bit because I got so many ideas I want to throw at you guys. TWTR. They are right now sitting at the top of linear regression. I believe they're going to fill that gap and come back down. 4 o'clock. Okay. Last one I'm going to talk about is Dr. Pepper. What a chart, huh, guys? Gotta love it. And they've had a skyrocketing year. I mean, look at this year they've had. They've just been on a rip-roaring upwards. But look at this. This chart here reminds me of the old Google charts. Anybody that's been with Best Choice for a while, in the fall, you know, the third quarter earnings, where there was just no lines here and everything was just straight up. If you go to best profit per trade, start right there at the bottom and go right to the top, 25% move. Wow. I love that. I want to talk about that. So what did I do? I put a May 85 call is what I said. May 85. DPS. May 85. Not a lot of open interest right now, folks, which is a big concern of mine, but I think after earnings this will increase. So keep this one in mind. This is not necessarily for now, okay? Okay, I've got a couple of other ones out there. I mean, Melly is also coming out with earnings on the 26th. It's a historical move as well. Oops. Mercado Libre, but it's a historical big mover too. 75%. Another one I want you guys to look at, wait for it to finish retracing, is Lululemon. Also has got a historical presence, but starts in March. So you can see it sitting up here, right? At the top of the regression, starting to pull down. Wait for it to pull down. I think I did a chart on this for you guys to see where Fibonacci, yeah, it is, where Fibonacci retracement is going to be. See, it's up here. I got a PPS. I've got a mobile breakdown. I'm thinking in the $60 range, thereabouts, and then play it long. All righty. I am going to shut up, open the mic. What are you looking at, Jerry? Talk to me. Start typing. Anyways, anybody, throw a stock what you're looking at. Anything, Earl, Gerald, Don, anybody. Halliburton, HAL. Well, they definitely had sideways motion here, and they seem to have pulled up. What does it look like? Yeah, they've got a crossover of a 10-20 and a 20 crossing a 50, a strong MAC pulling up. Yahoo is on my buy list, Jerry. I like Yahoo. It's a great tech stock. I like that. Halliburton. All right. Not real nice historical. What's it look like on my charts? Finish up with Halliburton. HAL. Try it again. HAL. Jerry, I'd probably wait for it to break. $46.28. Yeah, in the next couple of weeks. Next, if it breaks that, and it definitely in a couple of weeks, if it pulls that 49 up and it starts to get closer to crossing this, I would use some tighter time frames, and it definitely could be one to definitely look at. Okay, hold on. Let's take a look at these. Oops. What did I do? Did I get rid of something? Oh, there it is. All right, let's take these one at a time. Don said WLL. Take a look at that. Hit my puzzle piece to make sure that I have good data. Here's February. Oh, you know what? Let's go back to January. Let's see what this looks like here. 60%. Has it made the move? This is from the end of January to the beginning of February. Yeah, looks there. There's the end of January and the beginning of February. It also, well, okay, petroleum, all oil. Folks, keep your eyes on Conoco. I mean, Conoco, guy named Chris Cross, I told him about it back in 2010, made a killing off of it. Oil has bottomed. So all oil trades, I think, are going to be potentials. See, oil is now at 52. It went up. Oh, the other thing is gold. All of gold is a huge play right now as well. So oil and gold, take a look at both of those. What did I have for gold? God, I had so much stuff. GDX. Gold. Take a look at all gold. WLL, I think, is a possibility. Jose says PXD. Let's take a look at PXD. Earnings coming out. Ooh, coming out tomorrow. They better be after market. Okay, they're coming out tomorrow after market. PXD, what kind of volume is on this? March, let's see, Feb. A lot of short interest. Don't like that. I see some people probably selling far out of the money at the 75s and 80s. I mean, it's not much of a credit, 10 cents. Well, they may be bull calls, but what does PXD look like seasonally? Wow, that's a pretty strong move over the last 3 years. I'll tell you guys, Jose's a good trader. He comes up with a lot of good trades, so I may be tempted to look at PXD long. Oil and gas. Yeah, petroleum, right. This may follow suit, folks. So PXD may be a decent trade. Expensive on spot month, but since they're coming out tomorrow with a potential move of 4.5%, MMM says $6, puts me at 160. 587 at the 162. $8.50 puts me at over almost at 162.50. I probably would stretch that far. I'd probably be a little bit closer to the money. So yeah, that looks like a pretty decent one. Tim says AGN. Let's take a look at AGN. AGN, Allergan. One of the things, Tim, that you need to look for is when you look at best choices linear regression. This is one of the first things I teach people is on a 6-month chart, look at the spread between the top line and the bottom line. How you do that is you see when you move your mouse, it's reading the different days. This low represents the low line, this mid represents the mid line, and this top represents the top line. So you need to move your mouse all the way off the chart so it's reading that last bar and up and across, and then look at the spread between the low and the high. How much dollars is that? Well, it's actually pretty big. Now they look at, even though it's deceiving looking at it from a visual standpoint, they look like they're narrow, but the dollar amount is, what is that? $17? $17 actually, Tim, is not enough for me to really seriously consider it. It is oversold right now. It's you take a $17 and divide it by 224. Is it a 10% spread? It's one of my rules. I need a 10% spread to create enough volatility. Is it really moving up and down like we saw LinkedIn did or Twitter or Baidu? You compare this chart to a Baidu chart. Totally different picture. You got lots of volatility and long bars. That's another thing to look for. It means there's a lot of intraday volatility. Seasonally, doesn't look like it does too much. I've got a 60% probability. Let me download the information, make sure I've got it right. No, 70% probability, 2 into 216. Is this an earnings trade? Oh, they just had earnings. Okay, did they beat? Estimate was $1.18. Oh, they beat. I don't know what their forward guidance was. Oh, no, that's a nice looking chart. That is a nice looking chart. So maybe buy some time on this. I don't see a lot of, what is May? May's maybe out too far. March. Oh, there it is. Well, be careful. You also have the same thing at the 200. This is a 200 and 180. That's a huge spread, so I don't think that's somebody getting a credit. That's a huge credit if they're doing that. It's a $20 spread, which means you have to have $2,000 per contract you're buying, and that's a lot of contracts. So, yeah, there's some uncertainty there. April, almost 20,000 in the 190s. I'd have to do some more research, Tim, on this to see if this was worthwhile. I really would. So maybe you could email me. Just respond back to the email that you get for the recording and the Excel sheet, and I'll take a look. Okay, Jerry, CMG. Chipotle. Well, it screams in March. Okay in Feb from a historical point of view. 66% probability. Best rating. Now that puts me in the beginning. Now, is this an earnings trade coming up, Jerry, CMG? Oh, no, they already had earnings. Okay. Oh, yeah, they did real well, as I recall, didn't they? CMG had a nice... Oh, no, they didn't. They collapsed hard. Oh, okay. Wow, no. Wait for them to bottom. Wait for them to bottom around 629, thereabouts, and then play it long. Ulta, one of my favorite companies, well-managed, smart, A-L-T-A, Ulta salons. Obviously, the best time is here in September, but what are they doing here? Wow, 6 out of 7 years short historically. Let's make sure I've got the right info here. Yep, 6 out of 7 years short. But a nice looking chart. Really nice looking chart. I mean, they really smoked earnings. Leashing effect, pull away from the 49. Pull it back, doggy. Go up and away, pull back. Now looks like it wants to pull up and away again. Careful on that IV. Almost at 70% if it's historical yearly percent. That's a lot of IV. That means they're marking up the premiums on these options, folks. A lot of bullish interest for Feb, though. So I got a mixed bag on this. I've got a 6 out of 7 years to short it. It's sitting probably between the 60 and 70 percentile of its historical 7-year move. I'm concerned that it's sitting at nearly the 70 percentile of its IV rank. So there's a mixed bag on this. Email me later. Let's talk later. I'll find out about it. Last one, CXO. Concho. Did they already make the move? Ooh, yeah, they're strong. Let's see if it breaks the 200. If it breaks the 200, then I'd play it long. Okay? So just put a 200 on your chart, on any chart. Just make it a regular moving average. Doesn't have to be exponential. To go down to the S's. Change this to 200. Change it to purple. So I keep my brain hardwired. Let's move it to 2 so we can see. And that's sitting at 108. And with best choice, oh wait, I'm looking at the wrong stock. $121.95. Yeah, and this is a bearish engulfing at the top of linear regression. I'd wait. I mean, if it can break that, so I got a breakdown here. It's at the top of linear regression. It's had a nice run. I'd probably wait for it to retrace, or at least try to break that 200. If it can break 121 by the time this meanders sideways, I'd maybe looking at it. It's pretty much done that run. So I'd wait for it to pull back. Yeah, that's probably what I would do, because I can see right here, it looks like it pulls back a little bit. Yeah, 5 out of 5 short in a very short period of time, but I'd wait for it to pull back a little bit, and then I'd play it long. Okay, guys, sorry for taking so long. Geez, I've run over. It's 5:18. Any quick questions I can answer, anybody? Yeah, it's one that I love too, Jerry. It's on Gary's Ocean 11. It's one of the stocks I love to trade on a weekly. One of the members here on board taught me how to trade the bull calls. Earl, I always want to thank you for that. But I also know you have to play both sides. You have to play the bear puts and the bull calls. And then you could be successful, I think, trading that. But you have to play both directions. All right. With that said, email me anytime you guys want or call me. I'll be glad to answer any questions. And I'll talk to you guys next week. I wish everybody good trading.